All right, everybody. Welcome back to Matteo Denaro's show. It has been too long since I've done an independent live stream. It's probably been a month or two. And so figured I would take the opportunity to hang out with y'all and, um, talk through the next decade FID. A lot of you guys asked a lot of questions between that and VG. And then there's a lot of presentation material that is now out, and I think there's also going to be a live stream tomorrow. May or may not be able to do the live stream, so we'll see what goes on with respect to that. So hopefully, I'll be able to take an opportunity to take some time tomorrow at 10 a.m. ish Central Time, I believe it is, and go through the conference call that they're going to have. But that all being said, they already released the presentation material. So it doesn't look too different from the FID Train 4 material that they had put out the day after they sanctioned Train 4 about a month ago, which was like the middle of September timeframe. And so overall, things are looking good. But before we get into that, portfolio is looking good, all-time highs for me, and continuing to buy. The only differences I've made over the past few weeks or so is I've paused contributions into Nubank. I've paused contributions into SoFi. It's not that I don't believe those companies will do well. I believe those companies will continue to do well. It's just for now, I wanted to put money into something else. And that's something else that I'm putting money into is to Dutch Bros. Dutch Bros has been in a hell of a retracement over the past few months. And so I believe it's now at a reasonable price to be able to put some more money into it. And so, yeah, it's interesting. And so, wow, okay, the market did pull back a pretty good bit. My portfolio, even 2% down on the portfolio is a lot of money. So always cool to be able to log on and see. It's a blessing when you're down 2% and it's a large figure. So yeah, Oregon companies do pretty well, man. I think it's pretty funny. People are always like, Starbucks is going to take him out. It's like, well, they both started in the 90s, they're both from Oregon, so, well, I guess the Northwest rather than Oregon specifically, but Northwest. So if they were going to take him out, wouldn't they have already taken him out by now? So it's pretty funny when people start to say like Dutch Bros is going to go to zero. I've heard Cosmix is going to completely destroy Dutch Bros, and I haven't really heard of anything about Cosmix in quite some time. So very curious to see how that trial is doing for them, because I haven't heard of a rendition of that anyway. So things are going well, man. My portfolio position in NextDecade continues to grow. I bought some more yesterday, and I think it was like a month, or not a month ago, but within the last month, I trimmed a little bit more VG, which was well timed actually, because then I was able to put some money into Next prior to VG dropping below $10, and so that's pretty good. But overall, I've been buying back VG shares, just like I have been buying back, or not buying back shares, but been buying Next, VG, Palantir, Rocket Lab, two small oil companies that you guys wouldn't even know about, and then Bitcoin and Ethereum. And I think those are and then the S&P 500, as always, I buy in my 401k. And then I also have an independent position in my individual brokerage account. And so people are saying like, Matt, what are you buying? It's like, well, that's pretty much it. That's been the list for quite some time up until about a week or two ago. SoFi and Nubank were in that. And I've paused things on that. And I guess another development in the portfolio, I did trim a large percentage, probably 90% of, maybe even slightly more of my Nubank position, and I rolled it into Amazon. It's not that I dislike Nubank. I do like Nubank. It's just when you're at all-time highs like this, I just think it's appropriate to think about the companies in which you're going to hold for the long term, right? If you're fortunate like me and have been able to make money in this market, and hopefully a lot of you have, because it's been a very easy market to make money in. When you're at times like this, especially when the market starts to tip over a little bit, it's appropriate, what I feel, to kind of think about what positions you're going to hold for the long term. I think very often, and I've said this on Steve's podcast, and I've said this quite a few times now in Cashflow Chronicles as well. I feel like it's so easy to continue to expand the amount of positions you have when the market is super easy to be in, and people get a lot of FOMO. Oh, I'm not in this sector, I'm not in that sector, and then that's when they end up getting burned because they get beyond their span of control and they invest in things they don't really know. And not to say that you can't invest in things you don't know, but you can't invest in things that you have zero due diligence in, because when push comes to shove, you don't know if the stock price is going down because it was just overinflated, or if the stock price is going down because it didn't deserve to be there at all, and it was there because of hype. And so my fear with a lot of people is that when push comes to shove, like something like NextDecade is a prime example of this. When it went from $11 or so, literally like a month or so ago, to being in the 6s and 7s and 8s, I've been buying, and I've been buying as much as I can, and I've been moving money from VG over into Next because of the conviction that I have. And now it's not to say that you need to do the same. There is obviously still hair on this company, right? It still doesn't produce revenue, but at the same time, it's not like you're reinventing something. And if you think about it, like, there's a large difference between, and I'm not saying that you shouldn't invest in nuclear SMR companies or anything like that, but I just believe that it's easier to say NextDecade will get to revenue because it's a proven technology, right? Like, it's something that has been done before. So that is something where I can easily put my hat on and be like, okay, the United States is already doing 100 MTPA of this on a regular basis. We're going to try to double, if not slightly larger than that, over the next 10 years. So, okay, this is kind of old hat, if you will, and this isn't a new technology. It's more of just the same, and we're just trying to expand upon it. And so, yeah, you might say, oh, that's not a moat. That's not, why should I invest in these things? What's going on, Doug? Good to see you, brother. That's not a moat. Why should I invest in these things? But at the same time, like, just because it's not necessarily the number one owner of the market share or anything like that doesn't mean you still can't make money when you get in at a very early valuation, right? Same thing that was Rocket Lab, right? It was a $2 billion market cap when I started really severely buying a lot of these shares, and it's like a kind of a no-brainer. So in that respect, there's kind of that. So, but no, I didn't buy any stock today. I'm trying to think, did I buy any stock today? I rolled some covered calls, not because I needed, not I was underwater or anything like that, just because they were running out and I think they expire tomorrow. So I'd rather roll them today than wait until tomorrow. But that I just had the opportunity to roll them today, which was good because a lot of those stocks that I rolled them on ended up going down today, so ended up being positive. But yeah, I just want people to recognize, like, don't just blindly follow people into something because they may or may not know or have your best interest at heart and or have the same objectives as you. So, and I see a lot of people getting frustrated. I said this on Cashflow Chronicles, and Chris had to stop me, and Chris was like, I think he was just like, you're harboring on it too much, but I think it needs to be said. I think a lot of people tune into these live streams to hear a ticker symbol and like, Matt's got a couple M's in the bank. We'll just follow him, right? And he knows what he's doing. It's like, but what Land is doing is completely different, right? And I don't have a family, and so in that respect, I could take on more risk and be willing to take on some of these things versus somebody else. When push comes to shove, they might be down, let's just say 5-10%, and they might be getting panicked and sell, right? And so my fear is like, if you're going to follow somebody, don't do it blindly. Actually do your due diligence and understand, why is this person investing? Does what they're doing, and does that align specifically with what I'm doing, right? And what I want to do with my portfolio, right? And it's, it kind of goes back to that peer pressure thing that people always talked about. And I know it's a horrible analogy, but it's the truth, right? If like, when people were like, oh, well, when you're a teenager, you did something stupid, your parents are like, well, if your friends jumped off a bridge, would you do it? It's kind of the same thing, right? Like if I did something completely idiotic, would you still do it just blindly because you're just not even thinking twice? You're just following me blindly because you think it's the right thing to do. You want to fit in. You want to be blindly just like give up all sorts of control because then you don't have anybody to blame but me instead of yourself if you make a poor investment decision, when in reality, I'm just sharing what I'm doing online. I'm not saying to anybody to do anything. I think you just need to make your own investment decisions that are right for you. And that's I have no certifications or anything along those lines to be able to make those sorts of decisions. So anyway, just some food for thought. Like I think if anybody's getting both feet into the pool with some of these things, you need to think about it. And so I've had a lot of people reaching out about NextDecade, like, oh my God, like what should I do? And it's like, to me, I'm buying more. I think it's a great opportunity. A company is below a $2 billion market cap. I think it's going to be warranted north of a $20 billion market cap. And we've been fortunate so far to not be diluted with Trans 4 and 5 FID. So I think that's going to put pressure in the short term with respect to interest payments. But I would rather take a 15 to 20% hit on interest payments on the short term than a 50 to 75% dilution, which is what I was anticipating, probably even more in terms of share count. And like, because basically I was just saying, okay, well, this is literally verbatim. I was like, I don't know how many shares we're going to get diluted, but I was just like, I'm just going to say, for example, it's going to be at least 50 to 100% dilution. And so I was just like, so if we're going to go from 2 billion to 20 billion, yes, that's a 10x, but if you have 100% share dilution, then you have to divide that in half. So instead of a 10x, you're only going to get a 5x. Well, you think about it, it's like if you're able to refinance things and you're able to get them into suitable interest rates, and that's a short-term headwind, right? Like you think about it, it's like you're taking on that risk now. The cash flow doesn't look good now, but what about when you refinance things and you're able to kind of get those interest rates down from the 13%, in kind that you're kind of paying to something more reasonable, like a 7-8%. And that's already what we're seeing. We're already seeing the 10-year drop pretty expansively. So in that respect, like what's the 10-year treasury looking at like today? Let's see, 3.9. Okay, that's good because I got some stuff I need to refinance myself. So, but anyway, let's just hop into the investor presentation. Lars, thank you for the $5 super chat. Much appreciated. Appreciate the 59 of you guys being on here. Appreciate I don't come on live stream long enough and or more often enough. And if you guys always want to, feel free to hop over on YouTube. It's probably a more conducive environment for people that are on YouTube, or sorry, that are on X to chat more so, because I feel like there's not a very good chatting feature on X. So if you guys ever are on X, and I appreciate you watching on X as much as that is great, and I appreciate you. There is a much better avenue. So you can kind of see my my name tag here at Real Matt Money. You can just look me up on YouTube, and I have a lot of things. If you want to find me a little easier, you have the Rocket Lab Weekly. 2 cool little additions in the background. I did get some. So I have the 2 T-shirts, right? So you had the Peter Beck not built to make shit T-shirt, and then I have the Alex Karp T-shirt. I need to hang those up, but those are now in frames, and so that'll be fun. You can hear my neighbor's dog, so apologies for that. And then I have the Neutron T-shirt that I got, and I'm going to hang that in a frame as well. So expect that to be hung up. And I still have 2 additional shirts. So I have a Haste shirt and I have a Scouts Arrow shirt. So not 100% certain. Maybe I'll hang it on the wall, like next to the window on that wall. We'll see. But I don't know. These little window frames that I got for these T-shirts, they're okay. They're not great. They aren't as deep as I would want them to be, because obviously there's a lot of material that you have to kind of fold up if you're in that. So it's like, unless you're ordering it for like a baby shirt, which in retrospect, if I'm just going to buy a shirt to put in a box like this, maybe in retrospect, I should have ordered smaller shirts. But yes, if in the future I'm going to do that, I'm going to order much smaller shirts. But I think in reality, I just need to order something slightly different. But yeah, you can't even read the whole not built to build shit quote from Mr. Carp, and then underneath from Mr. Beck, and then from Mr. Carp underneath it says dominate. You can't even see that, but I got my certification piece in there, the little note from Alex Carp, and some stickers. So pretty cool. I need to do a better job. I have a whole bunch of actually might as well show them. Doug got me some patches. One of them is hanging up above the Albert Einstein. One of them fell down. So I need to hang that, but I got a bunch of patches, and then I actually sent a bunch of patches to my old apartment that I was living at back in 2020, 2021, 2022. But I got some patches, but so I have like $100 worth of additional patches and stuff that went to my old apartment, and then they reshipped it back to Rocket Lab. So I need to email them. Because I was hoping that I would be able to just pick it up at my old apartment, and but they just sent it back. So anyway, good to see everybody. Let's just run down the list really quickly. So we got Zoe Cold, we got Hot Ray, we got some folks on here from many moons back. We got a lot of people tuning in on X. We got Matt Logan, got Hot Doug, the myth, the legend. Let's hopefully get some lunch this weekend, my guy. We got Johnny Mac. We got Lars. Thank you again for the super chat. We got Brett tuning in from X. We got Rushel tuning in from X as well. We got Twan, Cheese on Top. We got Miss Olga. Thank you for stopping by. Another great Rocket Lab follower as well. Happy Me Fly. Happy to see you. Hot Raul, my guy. The myth, the legend. Good to see you, brother. And Miss Michelle, as always. Jackie. We got Dustin's Dollars. That's the man, the myth, the legend himself, everybody. And we got Damien. So appreciate everybody being here. October 16, 2025. As always, contemplate becoming a member or subscribe. Subscribing is completely free. Allows you to participate in the chat for no cost at all. Let's do a quick rundown of some of the stocks. We got Apple at $246, Amazon $213, Dutch Bros at $54. That's why I started buying again. We got Google at $250. Palantir at 177, Rocket Lab at 66, Spy at 658, the Qs at just below 600, Bitcoin having a little bit of a retracement. We got oil below $58 a barrel, and we got Henry Hub gas at $2.92. So let's have some fun. Let's go into specifically. Let me move this over here to the other monitor. Let's look specifically at the investor deck. Where did it go? Here we go. And let's see if there's anything in particular we can look at. Now, I don't have anything like any models or anything built in or anything like that, but yeah. So hopefully this helps anybody that is kind of confused as to what's kind of going on here. But one cool thing that you can kind of look at here, you have two LNG berths that are kind of going on here, and you have, this is what's already kind of established. So I think this is showing trains 4, 5 here, and then I think there's room for the 6th train still in this levee here, and then I think they have a presentation piece here where it shows they have additional space potentially to add additional volume over here as well. So curious to see if this picture will eventually, they'll either continue this or they'll have a separate levee and somehow connect it over or what have you. But of course, they put in their disclaimer statement. But this is, I think, the fun part with respect to what's going on. So project level EBITDA is going to be 3.7. So to next decade specifically, 0.8 billion. So that's what we're kind of focusing on. So keep in mind, there's a project level, which is owned partly by Mubadala. It's partly owned by Total, partly owned by a bunch of different companies. And then obviously there's specifically right now with Trains 5 acquired the piece for NextDecade specifically, which is the company we are invested in, right? So keep that in mind. Cool things. Phase 1 continues. Tank 2 roof raise was completed. Structural steel work progressing. Major equipment for Trains 1 and 2. So making good progress there. And to give everybody a reminder, they have a good footnote here. So it's over 30 MTPA of LNG, but not all that is allocated to NextDecade. Obviously, the first 3 trains, or not obviously, but let me reiterate, the first 3 trains are 21%, about 20.8%. Train 4 is 40% initially, then it goes to 60% in the long term. And then Train 5 is 50% initially and goes to 70%. So awesome in that respect. I think that is going to be an initially great opportunity. So you think about this, you're buying a company now that's worth about $1.7 billion. And in the next 4 to 5 years, we'll be cash flowing about $500 million before the flip, and then 0.8 billion, just under $1 billion after the flip. And that's before any, I believe, large major refinancing or anything like that, or any additional trains that are added. And I think the additional trains piece is something to really think about. So they talked about the 2 tanks having the roofs raised already. So these are the Trains 1 and 2 that I believe are the most far along. Train 3, I don't believe has really started construction as of yet. If anything, very minimal construction to date on Trains 3. But I believe Train 1 and 2 are pretty far along. So I don't remember if I did a brief looking at this presentation. It might not have everything specifically on Trains 1 and 2 and 3, because it might be just focusing on the additional updates for Trains 5. And I'd likely that this is what the presentation is going to be about specifically tomorrow. So I like what this is highlighting, because this is kind of giving you an idea as to how they're likely going to FID Train 6 through 8 in the future. So keep this in mind that yes, Train 5, big deal, first half of 2031 completion. So it'll start adding to the bottom line here in 2031 timeframe, but you have additional trains. So I anticipate you'll have a Train 6 coming online in either the second half of 2032 or first half of 2033. And then every year, 18 months thereafter, I believe you'll have another train coming online. So by the time you get to the 2035 timeframe, I believe you'll have all 8 trains on. And so if you think about that specifically, what we're talking about now isn't even the full picture as of yet. And so I think hopefully people are starting to recognize and open their eyes to this. Now, of course, it's expensive, right? So when you think about it, I mean, you're talking about over $30 billion worth of investment. How much of that is dedicated to NextDecade, and then how much of that is actually going to be from a debt to EBITDA perspective? How much of that is like actually going to be paid down and everything like that? This is how they got the Train 5 sanctioned. Of course, you need upwards of 75-80% of the capacity contracted for the banks to really feel comfortable. So JERA, which is a Chinese company, EQT, which is a gas company more so in the Northeast, and ConocoPhillips, all wanting to be a part of the SPA sales purchase agreement for Train 5. Total did not want to participate, so that's why I think with the initial investment that Total had, I think they had an option to participate up to 10%. They forewent that. I think that they just have already a lot of LNG on their books, and so I think they just wanted to take a breather. They did elect to take it in Train 4, so that's why Train 4 is only 60% up to NextDecade, but you'll see what the 70% for kind of Train 5 specifically. So yes, that gives an additional bit for spot pricing as well. So spot prices hold up, that could be beneficial. And so I'm curious to see if NextDecade will eventually, because not all of the volume is contracted through NextDecade, if that makes sense. So even though that 25% isn't contracted through SPAs, it's still jointly owned by the Mubadalas, the GICs, the Global Infrastructure Partners, which is partly BlackRock. We just saw that transaction kind of go through. So, which I think is pretty funny. Like everyone's like, oh my God, glut, glut, glut. Everything sounds like, but yeah, BlackRock is investing. Like, come on. It's like when people are saying how all these hotels and everything in Miami are going to be underwater, but yet you still have all these investment banks and mortgage companies still lending out money to put money into them. So I think it's pretty funny. It's like, really, do you really think that the oceans are really going to rise and engulf the entire coast of Miami? If banks are still giving out 20 to 30-year mortgages, like, let's use some common sense here. Do you really think that there's really going to be that poor of a or that bad of a glut that BlackRock is going to do a partnership? I just don't think so. So BlackRock, generally speaking, knows what they're doing. Let me just double check. I'm sharing everything like that. Appreciate the 67 of you guys being here. Ironic immigrant. Sorry. Thank you for the $50 super chat. Much appreciated. Rob is don't be mad at you. Why would I be mad at you, man? Matt, is next a natural gas energy play you're most bullish on medium term? I mean, I like it, but it is different. I wouldn't consider it energy per se. I think I would decouple oil investments with this. This is different. This is more of like an infrastructure play. So I would think of it more like a pipeline midstream almost, rather than like an oil play. If that's kind of what you're asking specifically there. I view them almost as disparate sort of, I don't want to say disparate industries because they are partly the same, but this is a different end user. So it's less upstream focused and more midstream, downstream focused, if that makes sense, because at this point, the upstream part of it is done. It's already been produced out of the shale and from Permian and Haynesville and Eagle Ford. So in this respect, like LNG has already been produced, and now you're just trying to figure out where the best place to transport it is. So it's more along the lines of midstream pipeline-esque, because you're transporting it rather than really producing it, if that makes sense. So to me, you have to think about it in that lens, and apologies if that's confusing, but it is very different in terms of what you can expect. The reason why it's important is because basically you're getting paid a fixed fee, like for 75% of train 5 and like 92% of trains 1 through 3, and then I believe 80% or so of train 4. All of it is fixed. So for every MMBTU that you put on a boat, you're getting about $2.50, coupled with 15% premium for whatever the Henry Hub is, and then plus maybe some other small fees here and there. But that's fixed, right? So even for this 75% of train 5, even if natural gas goes to $20 an MCF or something like that, this is fixed. Yes, there's going to be that 15% component of Henry Hub. You can see it's indexed at 100% Henry Hub here, which I think is interesting. Curious to see if there's any other sort of indexing or anything like that where they have to pay 15% on top of it or something like that. Which I'd have to pull up and see if there's any additional material in the background with respect to the other trains and how they're situated. But I know generally from the other trains, like train 4, there was a 15% uplift specifically on every item that they, every MMBTU that they push through. Where did it go? Did I lose it? There it is. So that might be something I need to pull up in the background. In fact, let me do that. There's a recent presentation just had that as well. but that's kind of the good part, right? So it's somewhat insulated from the prices of natural gas in the United States. And so one of the key pieces as well is there is some upside, though, because 25% specifically in train 5 and then 8% in trains 1 through 3. I believe 20% in train 4 are not completely contracted. And so if things do go to $20 an MMBTU, then you have the opportunity to take advantage of that. Let's see. Does it still have the regulatory LNG fundamentals? Spot index. Okay, so I still think it's 100% indexed to Henry Hub, but I still think you pay a 15% premium on top of it because train 1, phase 1. Let me share this right now. Phase 1 is the same pretty much. 90. Somebody had it somewhat linked to Brent. Sometimes people link things to Brent with like a scale, right? Like if Brent goes up by $10, then the price that you're paying for for the gas is, going to go up by 13% of whatever that is. So up to a ceiling or a floor price or something like that. So sometimes people like to do it that way. I think in the United States, we like to do it based off of Henry Hub because, everything's kind of linked to Henry Hub, and Henry Hub is kind of decoupled from Brent and a lot of other things. It's kind of its own entity. That's why we're exporting it, right? We have so much of it that we kind of need to. So let's look. So yes, this is something that's kind of important. So to give you an idea to where we're at, I think this is important because people are like, okay, 0.8 billion, that's not as great as I was expecting. The thought process wasn't always the 0.8 billion, right? I mean, when Chris and I were starting to do the research, we were always noticing that there was this room for train 6 in here. And so going back to the levy, so the part of the levy that we were kind of talking about, if you remember, at the very beginning of the slide pack, let's go to the beginning. Here's the 2 boats. Here's the entirety of the levy. And then you still have this, you can barely see it because it's hidden behind train 5 here, but you have this open space in the levy. So if you go back to this slide, whoops, you can see that spot there, but then beyond this levee, you can still see a potential area for further development. And then to the east, as you go towards was that South Padre, you have an additional area for development as well. And so this easily can fit train 7 and 8, but they're saying they could get up to 10. So curious to see how they organize that and get it working. Yeah, but if you're able to get up to 10, I mean, that's huge. And I think for what they've talked about, so expect to pre-file train 6 with FERC in 2025. So before the end of the year, train 6 should be filed and full application in early 2026. And they say as early as 2032. So second half of 2032 or first half of 2033 is kind of my thought process as to when it could actually come online. So think about it, like that 0.8 billion, that is what we're thinking about. Now add 100%. I assume train 6 will be 100% owned by NextDecade. I do not think, by the time they actually start building train 6, I think you'll actually start getting cash flows from the other partners. And so I anticipate maybe they'll farm it down, maybe there will be a farm down, but I would anticipate that they hopefully can take it somehow through FID at 100%. And this kind of goes to show you what this could look like. And this was always kind of the vision, was you could get up to 45 MTPA or more in the pipeline. And if you have the ability to put up to 10, you could get 60 MTPA. And that's the fun part, right? So of this 30 MTPA, you're not going to own too much of of it, right? Because you only own 21% of trains 1 through 3, and that's more than half of this 30 MTPA. And then you only own potentially 60 to 70% of trains 4 and 5. And so by the time you get to trains 6 through 8, hopefully that's 100%. So that alone will be a massive uplift. And then same thing with potentially trains 9 and 10, if that's available, that'll hopefully be 100% as well. So the real value is in these potential trains if they're able to fund them. But you think about it, 60 MTPA is pretty large. Sabine Pass is about 60 MTPA. And so if that's going to be there, that's going to be world class compared to, say, Sabine Pass and something like that, in other facilities like that. And Corpus Christi is trying to get closer to 60 MTPA as well. So really, really impressive in that respect. So yeah, I'm just trying to think if there's anything else particularly on this slide, but I think it's impressive, and I think that people need to think about the project value of a 60 MTPA facility is world class, right? I mean, Cheniere is built off of 2 facilities, Sabine Pass and Corpus Christi, and it is a like $50 billion organization. So think about it in that respect. It's like if you're able to get a 60 MTPA facility, we're talking about tens of billions of dollars here, and you're buying it less than $2 billion market cap. Now, the thought process is how much dilution is going to happen between now and the end of when these things kind of come online. So that's kind of the thought process. Let's just see. Good morning from the UK. Hello. I'll be in the UK at the beginning of the month, so it'll be fun. What do I think of Energy REIT? I don't know anything about it. My whole timeline on Next has always been for at least 10 years. Does Next and KMI compare at all? KMI is more pipelines. Next is LNG, liquefied natural gas. So basically cooling down gas from the pipelines that maybe KMI or an Enbridge, particularly for this facility, Enbridge would be able to provide, and putting it on boats. And the reason why you're cooling it down and liquefying is because it takes up 1/600th of the space. Think about gas, right? If you condense gas, like if you boil water, it goes into a gaseous form. That's why it's boiling. But if you liquefy it, it's definitely going to take up a lot less space in its liquid form. So that is why you're kind of liquefying it. Hot Dog just got his hood card. Let's see, Rob W. So no exposure to natural gas, price deviation to exposure to rise consumption and transport. I mean, there is that. It's not fully contracted. So technically, if Henry Hub or TTF or JKM, which is the Dutch and Japanese tracker respectively, changes, then there's a delta between there where you could benefit, but it really all just depends. But right now, a lot of it is locked in. And yes, there is a component where 15% of everything that you sell is kind of multiplied out, but for, part of it is for transportation costs and things of the like. But you will make a margin on that 15% of whatever you sell. But yeah, I mean, in that respect, that could help, but there is still that uncontracted volume, 20% for train 5, 8% for trains 1 through 3. And I have the presentation for train 4 open. Or I had it open at least. Train 4 is 4.6 MTPA. Okay, so it says 0.1 MTPA, so it's literally 78% contracted versus the 75%. So pretty much the same. So this is what everyone's concerned about, right? Is there too much? So to me, I look at this and I think that there's lots of ability to continue to develop these LNG projects at pace. Historically, LNG projects run over time and over budget. So far, it looks like NextDecade, at least from what I've seen, has been okay for trains 1 through 3. But we'll see. With cost escalations and everything like that, we'll see what ends up actually showing up. But let's just see. Expect LNG's global gas demand to double. Yeah, from 2015 to 2030. Agreed. With LNG continuing to grow faster than global gas, which also makes sense. Let's just see. And I think what people need to recognize is, like, I think a lot of people are sitting here being like, oh my God, they keep bringing up a chart. I don't know if it's in here or not. There's a chart basically about what the United States is going to be bringing on between now and the end of 2030 of LNG facilities. So you think about it, you have Venture Global, which is one of the reasons why we're investing in Venture Global. You have the Rio Grande project, that's 60 MTPA potentially. You have Venture Global, that's going to be an additional 60 to 70 MTPA beyond what they already have brought online. So you're talking about large amounts of growth. But at the same time, you think about it, there's a lot of other countries that unfortunately are at the back end. So there's a lot of countries in the 90s and early 2000s that were really pioneers of LNG that unfortunately have not been backfilling and infilling to continue those projects. And all those projects were brought online in the late 90s, early 2000s. Well, a lot of these facilities only last between 25 and 35 years. And if you want to extend them, potentially require some regulatory, some additional capital expenditure to extend the life, etc. And so we've come a long way now with understanding LNG and building these facilities to probably make them heavier duty and last longer. And so I think maybe I'm cautiously optimistic there, but you have facilities around the world that are, I don't want to say going to be mothballed, but partly decommissioned. Places in the early 2000s that did extremely well that are half at capacity now, versus the United States is, really trying to export as much as possible because we have such excess capacity internally in the United States, and the rest of the countries around the world are trying to align themselves with regulatory and green initiatives and have yet to kind of come back to middle in terms of the pendulum to try to balance the green spend as well as the hydrocarbon spend. And unfortunately for them, it's increased their taxes generally, has put a lot of regulatory scrutiny upon their oil and gas industries. And so that alone has damaged their ability to continue to grow in those particular areas. It's not to say that they aren't going to grow or at least plateau, but a lot of them are on. And so when you say growth, where's that growth going to come from? It's like, well, a lot of those, I don't really see a lot of additional projects being sanctioned in a lot of these. Oh, my laptop is not happy. Sorry about that. I don't know what's going on there. Let's hope it doesn't blow up. But yeah, not sure what's going on with my laptop. Doesn't sound very, very happy. There we go. I just had another laptop on top of it, so that's probably why. But yeah, I do need to take it out and blow it out of dust. That's another thing I need to do today. But if you think about it, it's really going to be the United States and Qatar that really show up with LNG growth, with select Middle Eastern countries as well, other than Qatar, that are really going to help grow. But I think a lot of that is a pretty small list of potential growth comparatively to, say, Qatar and the United States. And so with everybody else either at plateau or on decline, the offsetting of that is really going to come from the United States and Qatar. So I think that's really what you need to think about. And I think that's a lot of what this particular slide pack is kind of talking about with respect to how, generally speaking, there's always tranches of growth and waves of projects that kind of come on. But by the time you bring them online. There's like right now, there's a whole wave of projects that are being sanctioned. They'll be brought online before the end of the decade. But then, how many are going to be sanctioned beyond, between 2030 and 2035? And right now, from what I'm seeing, I'm not seeing any companies kind of coming forward. So it's like, yes, you might build it and it might be oversupplied or tight supply compared to demand in the short term, but in the long term, you don't have a lot, and that problem with other countries that are going on decline is only going to be exacerbated as you go into the middle of next decade. I'm fairly confident in that. And so what we're seeing here specifically is what basically they're referring to as spot margins. This goes back to the gentleman's question, Rob, about how can you get upside associated with some of these projects, dependent upon, or downside as well, and some of these projects dependent upon Henry Hub price. And so I think what you're seeing here on the screen is the basically the difference between what the GCM, Gulf Coast margin, would be versus the Japanese market, JKM. And so what you're seeing is kind of that difference between the two, and how much money you can make between it, basically. And so what you're kind of seeing right now is an average spot price over the past, say, 16 years, 15 years or so, of about $7.20. NextDecade is forecasting about $5 in their guidance. So anything above that 75% for train 5, that 76% for train 4, that 8%, that 92%, which is that 8% remainder for trains 1 through 3, they're assuming a 5% margin, a $5 margin, comparatively to, say, what others are forecasting, like Venture Global, for example, is assuming something closer to the $6.75, $7 for their spot pricing comparatively. And so what I think a lot of people are kind of modeling at the moment is, yes, you get a gas and plant margin, and then you get the piece where you're kind of taking on the LNG, and instead of getting $2.25 or $2.50 per MMBTU as like a guaranteed marker margin for your facility, you're taking on the cost of shipping and things like that, right? So yes, you might get this wide spread of being able to take it from the Gulf Coast, but then you have to pay for shipping costs, etc. So yes, I mean, you're able to potentially get a $7 spread between taking it from the Gulf Coast and selling it, but you have to then figure out how you're going to ship it there, the regasification, etc. And so there's that sort of thought process. So yeah, so this is kind of just showing that right now, off that 0.8 billion that's kind of in the forecast, they're using $5 for the spot pricing, comparatively to, say, what others are forecasting, which is north of $6.50, closer to $7 for a lot of people. This is going into specifically how they get the funding. So this is what's kind of concerning, I think, to a lot of people, is you're seeing the money and the interest rate kind of coming at this, and I think a lot of people are getting kind of scared about the SOFR plus 200 basis points, and then SOFR plus 4 percentage basis points, and then you're getting the 13% in kind for some of these things as well. And I would just say that that's initially what's kind of happening. If you think about it, that the company doesn't make any revenue at the moment. So of course, when it comes to investment grade, it's not showing up very favorably in terms of investment grade, because right now all you're doing is stacking a lot of debt, and you don't actually have any revenue to kind of pay for it at the moment. And you're really relying upon the potential of the investment and the trains to really hopefully come through and start providing that revenue. And once it does, then your debt to EBITDA is going to drop drastically and hopefully become investment grade. And if that's the case, you can get much more favorable investment rates kind of going forward. Let's see. How much can they make off of one train? It's dependent, right? Because not every train is equally owned. Trains 1 through 3 are 20%. Trains 4 and 5 are 50% and 70%, or sorry, 60% and 70% respectively. So it varies by train. No, thank you. Appreciate everybody coming on and watching. Yeah, thank you. Yeah, MTPA. Sorry, I'm probably talking very, very quickly. We got Hot Doug in here. Cash flow objectives assume $5 spread. Yep, thank you. Much appreciated on that. So yeah, most people, I think that might have been what scared people. I think a little bit was they're assuming $5, and I think a lot of people were initially assuming that they could assume $7. And I think right now, if we go back to this graphic, it's been kind of squeezed, right? I think a lot of people were assuming LNG was going to go and be worth $10 or $15 forever because of what happened in the latter half of 2021 and throughout 2022. And we've obviously seen that challenged as the market has kind of regulated itself. And yeah, so I think that's something to kind of think about specifically. Yeah, this assumes also, this says it in the footnotes, $2 per MMBTU shipping costs. So there you go. So let's just see. Yep, so where were we? We were here. So this is exactly what they're doing. And I think this is pretty comparable to what was in Train 4s as well. So you have $233 million in cash that's going to be committed. The actual term loan facility, which I think is going to be used to actually build the facility itself. And then you have a $600 million term loan, which is going to be 13% paid in kind. So basically, they're going to wait until the train is complete before they actually start paying actual payments. So what this is going to do is it starts at 600, but it's going to basically compound on itself 13% per annum. And then they're going to be able to call it at par value starting in September 2030. And what I anticipate is they'll call this starting in September 2030. And what they'll then do is kind of refinance it at something way better than the 13%. So that's kind of my hope and my thought at the moment. So term loans expected to have an attractive all-in cost about 9%, providing a flexible bridge to simplified capital structure during steady state operations. So there's that. So yes, here's kind of the commitments and economic interest. So $283 million commitment completed September 2023 from private placement equity issuances. So 20.8% economic interest for trains 1 through 3. So here's train 1, here's train 2, and then here's train 3 over here. Train 4, 1.13 billion commitment, fully funded with 1.3 billion in term loans. They get an initial of 40% and then increases to 60% after they achieve certain returns. So that's train 4, which is further down here. And then same thing with train 5. So the reason why it goes from 40% to 50% initially is because Total is not involved in train 5 versus they are involved in train 4. And so there you go. So overall, 2.7 billion for trains 1 through 5 in terms of equity commitments, funded with about 20% cash and 80% term loans. And I think that the reason why is because I don't think they had to come up with any cash in trains 1 through 3. And that's part of the reason why they only got a 20% interest. They're basically being carried comparatively. So if you think about it, generally these trains cost like $750 million per MTPA generally to build. And so if you think about it in that respect, this is going to cost trains 1 through 3 around $10 to $12 billion to build, and probably even more because of the infrastructure. But they're only coming out of pocket $283 million. And so you mean to tell me they get 20% and they only have to spend 283? Like, that's pretty good. Yes, of course, though, they still have a bunch of debt that they have to then kind of have in the back end, right? So that's a piece of it as well. But this is what's kind of the cool thing. And then the reason why they get much more is even still, like, these guys, if you think about it, they put up just as much as the other equity partners, about 1.3 billion in cash. 1.13 billion in cash and 1.3 billion in cash for Train 5, and they end up with up to 60% and 70% respectively for Trains 4 and 5. And I think the equity partners are putting in just as much. So it's kind of interesting how in the back end, if you think about it, NextDecade is then able to start to recuperate some of their interest. So they were fully carried on Trains 1 through 3. Trains 4 and 5, they were somewhat carried. If you think about it, they have to put up half the money, but they end up with 60% Train 4, potentially 70% in Train 5. They meet the economic thresholds. And then if you think about that, then hopefully Train 6 through 10, which, yes, I said 10. That's the goal, is 10 trains. Those will hopefully be 100%. And so, of course, they'll have to come up with, 2 billion, 2.5 billion a pop to be able to fund those. But think about the economic interest specifically in those. This is something I've been trying to wrap my head around, specifically because you have a lot of debt everywhere, stacked in a bunch of different places. But this is pretty much what you're investing in. So you have Trains Phase 1. This is pretty interesting because they all have a bunch of different dates in which everything because it's kind of going to be fun when you get to the 2028, 2029 timeframe. So after Trains, it's kind of strategic. After Trains 1, 2, and 3, or even Trains 1 and 2 start to come online, I anticipate the investment grade of the company will change. And so I'm very curious to see where interest rates are then, because these actually aren't too horrible of interest rates. A lot of these were probably done, though, when interest rates were nearly zero for businesses. And so I'm kind of curious to see when they refinance these, what it looks like. Then you get like an investment grade. How does it look comparatively to some of these things? But I'm curious to see it, because if you're able to refinance these things, like a $500 million loan for 30 odd years or so at 6.5%, like that's pretty crazy. So interesting, very interesting. And a lot of this is, you have to think about it, a lot of these are due in 2030. So this is 1.5 billion in 2030, 225 million in 2030, 9 billion in 2030. 250 million in 2030. So you're going to see a lot of refinancing towards the end of the decade. So very curious to see what they end up doing in terms of getting interest rates for that. But this is, I think, where you start to see and start to understand the value of this, right? So even with just Trains 1 and 3, you actually start to see how much volume you start to get. So you have contracted volumes, uncontracted volumes, and how much money you're going to get from these things overall. And if you look at it specifically, it's like, well, here's about what they're basically forecasting is about $2 billion worth of cash flow that you get right to the bottom line before you even start up Train 5. So before you get this large tranche of this last train to come online, you really start to get a large amount of capital already coming through that you can help use to pay down interest or to pre-fund other projects like Train 6 and beyond. And so I'm very curious to see once they kind of get over this hump, what are they going to focus on now that they kind of have this? Like, are they just going to continue to just sanction, or are they going to how are they forecasting this? Because the way I look at this is like, you can use part of this money to help finance part of Train 5. Obviously not a lot of it, because Train 5 itself is going to be, in the order of $4 to $5 billion. So, you can't just, have $2 billion and pay for all of it, but at least it's going to help ease some of the pain. And then once you get Train 5 online, you're going to be making at least $500,000 a year. And then hopefully by Train 4 will be somewhat on the path to meeting its economic thresholds. And if it's meeting its economic thresholds, then it'll flip, and that'll be slightly more. That'll be probably get you, instead of $500 million a year, it'll get you closer to 650 million a year. And then when Train 5 flips, that'll get you closer to that 800 million a year. So very curious to see. So, and this is a key statement here. So expected using its cash flow from Trains 1 to 5 to reduce the FinCo and Super FinCo loan balances and optimize the capital structure. So what does that mean? Let's go back. So you have these Super FinCos, which, are overarching all these different things. And I think what it is this is the project level sort of financing that, unfortunately, when you go through, you have to use to pay the bank, basically. So if you think about this project level, this is a massive benefit, right? So no matter what, the business is going to be making on an EBITDA basis 3.7 billion EBITDA, which is pretty impressive. But a lot of that money is then going to interest and debt payments. So that doesn't change dependent upon the project, because the project is the project. But the amount that actually goes to specifically NextDecade is kind of what's important. And so that's where you start to see the things that are flipping, it moved kind of more so towards specifically to NextDecade. So it's pretty interesting if you look at it on a project level distributable cash flow basis. It's going to produce about $2 billion in cash flow from these trains. So start thinking about, if you add an additional 3 trains, you're going to be getting at least another $1 billion in cash, and that would immediately go to the bottom line, because hopefully it's 100% owned by NextDecade. But the piece that's most burdensome at the moment is this 1.6 billion in interest and debt amortization payments. And so I think that is going to be the focus of what NextDecade is going to try to do, which is knock down that as much as possible. And then they also have their own specific interest payments that they have to worry about as well. And so there's the ones that are at the project level, then there's the NextDecade specific level that they need to kind of focus on. So if that makes sense, there's the piece where, if you think about it, NextDecade is funding 50% of Train 5 in this particular case, of which they're committing $1 billion. Well, they don't have all that $1 billion, but what they can do is they can set up a loan to be able to get a portion of that $1 billion and then use that to fund it, right? So that's pretty much what they're kind of doing here. So annual 5 train fixed fees from Henry Hub Link is about $3 billion in total, including about 1.2 for trains 4 and 5. Fixed fees from Henry Hub Link spas total $3 billion. Okay, so I think they're assuming then that 700 million is coming from excess fees from just the 15%. So let's see. So the note, numbers may not foot due to rounding. Steady state operations reflect the period in which respective trains are completed, placed in operations, and deliveries under their respective LNG spas have commenced. Projected guidance for trains 1 through 5 at distributable funds for cash distribution of train fund reflects economic interest of 20% in phase 1, 40% in trains 4, and 50% in train 5. Projected guidance for post-flip period reflects an economic interest of 20%, 60%, and 70% for phase 1, train 4, and train 5, respectively. Timing of the economic interest is dependent upon the final cost of each project, revenues earned during commission, Revenues earned during the periods under the LNG spots for each train, including the value of uncontracted volumes sold into the market, amount of LNG produced by each train. So if you go way above $5 per MMBTU, then maybe we get to flip earlier. But right now it's assumed for kind of middle of the decade. Next decade, 5-train projected interest expense assumes cumulative next decade share of the LNG distributable cash flow from train 1 startup to train 5 will be utilized to reduce outstanding debt to financing next decade's equity funding for train 4 and 5, and remaining balances will be used to refinance in the debt capital markets at interest rates in line with current market rates. So basically, they don't have to fund anything for train 4 and 5 because they're being carried, right? So really, it's just the debt from train 4 and 5 that they need to worry about at the next decade level. So this $200 million is really just to pay for, obviously, general administrative costs, but also trains 4 and 5. Because remember, they were pretty much carried. That's why they only have 20% of trains 1 through 3, because they're pretty much carried by the other parties in phase 1. So Rio Grande, next decade share of Rio Grande distributable cash flow and next decade distributable cash flow are non-GAAP measures. Let's see. Yeah, so they're just non-GAAP measures. That's pretty much all that's saying there. But this is where I think it gets fun, right? So you have 2.1 billion in project level distributions. Of that, you get 0.8 billion into next decade specifically. And then if you think about it, the whole project, this is key, right? The whole project the whole Rio Grande LNG project level distributed cash flow increases by 85%. But so if this increases by 85%, let's do some quick math. Okay. So that's that's up to train 8, right? So 2.1 times 1.85. So the whole thing, if you get up to train 8, the distributable cash flow could be 3.885. So minus 2.1. That's an additional 1.8 billion, the current market capitalization of the company, right? So keep that in mind. The company is worth 1.8 billion. This additional 85% that they're referring to, an increase in potential cash flow for trains 6, 7, and 8, is an additional $1.8 billion in distributable cash flow, which is the equivalent of the current market cap of the company. If this is truly owned 100% by next decade, then the cash flow attributable to next decade out of this entire thing would be the 800 million plus this 1.785. So 2.6 billion in total distributable cash flow to next decade. So that would mean that on a project level basis, up to train 8, you're talking about the is that right? 2.585 divided by 3.885. So you're talking about then that makes sense. If you're talking about this being 100% next decade, this being 100% next decade, and this being 100% next decade, then you're talking about 66% of this. So this 2.1 billion, if it increases by 85% as expected, goes to 3.9 billion for the whole project distributable cash flow. So the EBITDA is going to be higher, but the distributable cash flow, keeping in mind you have to pay interest rates and stuff like that, and amortization, etc. But this is going to go from 2.1 billion to 3.9 billion. But 100% of this is going to go directly to next decade, whereas right now of this, only 0.8 billion of this, so a little bit over 30 something percent of this project 1 through 5, trains 1 through 5, is going to next decade specifically. So if you add train 6, 7, 8, 100% goes to that. That goes from, above 30 something percent to now growing it to 66% of the total project level distributable cash flow, then going to next decade. So each expansion train has potential to generate over 0.6 billion of project level distributable cash flow. We'll seek financing structures that maximize next decade's distributable cash flow per share. Right now, They're saying that trains 6 through 8 are shown projected project level distributable cash flow at 100% ownership. So they're assuming 100% ownership at the moment, and they're assuming 75% is going to be through long-term SPA agreements comparable to what's been done for Train 4, Train 5. And then the 25% is going to be spot pricing at $5. So there is upside potential there if JKM and things like that continue to do well. So that's what's impressive here, right? So you're talking about a company, if they maintain 100% ownership of through trains 6 through 8, if they maintain that, you're now talking about a company that has 2.6 billion in the next 10 years of distributable cash flow. And of that, the company is trading at less than a $2 billion market cap. And what they're hoping is that there's a 9 and 10 in here that are not specifically on this graphic, but they're hoping that there's a 9 and 10 in here. And so let's go through the capital priorities that they have here. So protect and safe, reliable operations by maintaining high integrity assets. That's a given. Should always be number one. Maintain investment grades for Rio Grande LNG Phase 1, Train 4, and 5. Plan to term out project level loans and stagger maturities via opportunistic debt capital market transactions. So like that, as always, we should always be, when they ask for more debt at this point, if they ask for more debt, we should be basically taking something from 2030 and pushing it out in time, and hopefully at a more favorable interest rate. That's kind of the hope that they're doing. Amortize, pay down debts as needed to maintain investment grade metrics to get better interest rates, and hopefully it's a positive feedback loop. Use NextDecade cash flow ahead of steady state operations to decrease leverage at the holding company level and refinance remaining balances. So expect to pay down a significant portion of the debt at the holding company level, including the FinCo and Super FinCo associated with Trains 4 and 5, effectively creating a bridge to the steady state operations, and expect to refinance the remaining portion via opportunistic capital market transactions, and then eventually return capital to shareholders post distributable cash flow of Train 5, including pre-flip and post-flip cash flows after structure optimization. So they'll hopefully balance the capital returns, managing and investing in accretive organic growth opportunities. This is something I've always kind of been like, confused puppy. What does that mean? There's other sites in the Brownsville ship channel. Are they talking about the other sites in the Brownsville ship channel? What are they specifically talking about? With that, they're going to buy boats themselves. If they buy boats themselves, then maybe they'll be able to take advantage more so of some of the spot pricing. That's what Venture Global is doing for their spot pricing. I think they already have 4 boats, and they're going to buy another 3 or 4. So they're being built at the moment. So curious if that's what that means. And then expect to provide additional information regarding long-term capital allocation and capital return plans after operations commence. So I don't expect them to talk about dividends or anything like that until after 2030. I'm not even looking forward to it, because by 2030, Train 4 is probably not even online. I wouldn't be surprised if Train 4 comes online the first half of 2030, second half of 2030. Train 5 will probably 6 months to a year after that. So hopefully by 2031, Train 5 will come online. So I really don't want any dividends before that. I'd rather them pay down the debt and get themselves in a space where they're better investment grade. And that's pretty much it. And that's why I'm bullish, man. Like, if you think about it, the key thing is this slide particularly. It's the, I think what initially the difference between where I think we were before the Train 4 sanction and where we are today, and Dustin can probably explain this very well, and I think he did explain it very well in his last presentation that he had, was that I was expecting NextDecade to dilute shareholders. So the value of NextDecade was about 2.5 or close to $3 billion. I was expecting them to dilute by 50%, get $1.5 billion, use that to fund Trains 4 and 5, And basically, instead of having this 0.2 or so for interest payments, that, basically they'd be able to get 1.1 or so billion in their share of distributable cash flow. But instead, which I think is great, right? Because you think about it, you're like, oh, like that would have been cool if we were able to get $1 billion, but now you have 50% less ownership per share. So instead, if you think about it, you're taking a 20% haircut today in terms of, okay, yes, it's going to be 20% less distributable cash flow, but I'm able to maintain 100% ownership of my shares and not get diluted by 50 to 100%. To me, that's bullish. And so, yes, in the short term, if you were short-term minded, you're hoping it's going to go to 15 or 20 bucks after train 4 sanction, train 5 sanction, then yeah, sorry, you're shit out of luck. But that was never my intent. My intent was never, hey, let's flip this as an arbitrage play after train 4 sanction or train 5 sanction. My thought process was, okay, you're going to be getting about 0.9 to 1.1 billion dollars in cash flow to the group, meaning NextDecade to the group, and you're going to lose 50 to 100% of your ownership in shares. So, shit, what was me? And then you're going to build on top of that. So now let's go back to where we were on this particular slide, right? So now that we know we're owning 100% ownership of our shares, at least through for now, through train 5. And we do get to this 2.6 billion dollars in cash flow from operations that we're going to be used, or distributable cash flow that we're going to use. What multiple do you put on that? And keep in mind, that's not even the full thing, right? I mean, that's not including potential upside of, let's just say you get $10 margin instead of $5 margins. There's a lot of potential upside, not a lot, but there is potential upside to this. There's also downside. You can't guarantee you're going to get that $5 for spot pricing. But I would say it's a safe bet. So I don't know. I'm fairly confident that, it's going to turn out well. And then if you start adding in trains 9 and 10 onto this, well, it's probably going to be something comparable. Okay. So let's add another. So let's just say it's 2.5. That's the lower end that I was calculating, plus another 0.6. Now you're talking about 3.7 billion if they own 100% of it, right? There could be scenarios where they don't, and Dustin's better about this than I am. I'll let him model if it's only, say, 50% or 60% or 75% of trains 6 through 10 are next decades. But if you're talking about that, $3.7 billion in distributable cash flow, if you build up to 10 trains here, before any additional organic acquisitions that they're talking about, what does that mean? Does that mean additional LNG facilities? Does that mean they're going to start buying pipelines? Like, what does that particularly mean? Because what they could do is they could start buying their own pipelines. Like NextDecade could buy the pipeline from Enbridge, or part of the pipeline from Enbridge, who's going to be supplying the Rio Grande LNG facility. And if that's the case, then that's more money in their pocket because they're getting margin regardless, right? The whole project needs gas. So while NextDecade owns the project, you still have the other equity ownership partners that, you still have to feed regardless. You still have to feed the project. So you almost have those guys then paying you a fee, intercompany, if that makes sense. So anyway, I don't necessarily know what they mean by organic options. If they meant inorganic, so keep in mind, organic means that they're going to grow naturally. That doesn't mean there's going to be any M&A or anything like that. So that, they're not talking inorganic mergers or anything like that. So organic means specifically it's going to come from in-house. They have other land that we're not aware of. But if you think about it, what multiple do you put on $3.7 billion worth of cash flow? And what can you do with that? I mean, if you think about it, this is an expensive project, right? We're not talking about something that's small. We're talking about a project that's going to cost north of $40 billion or close to $40 billion to do. But if you think about it, this isn't even the entire project level. This is just at this is just NextDecade's portion of it. $3.7 billion of cash flow, potentially. Maybe less, maybe more. And so if you're starting to think about this, you know, trains 1 through 3 are not the point of why you invested in NextDecade. Looking at trains 4 and 5 is starting to understand why you're potentially investing in NextDecade. But even still, those are only at a 50-ish% equity ownership. Trains 6, 7, and 8 is when really you're starting to get the money out of the company. And that's when I think that people are really going to start to understand, oh shit, right? They're going to have their oh shit moment. And that's when they're going to want to get into the company. So I don't think that that's going to happen until you really start to hit FID. And when does FID on those? I don't know. To get them online by mid next decade, like they want, by 2035, I mean, train 8, you have to think has to be done by 2029, 2030. So I would assume then that, every year or so before then, you would have an FID for, 6, 7, 8. So anyway, let's scroll up a little bit. Let's see what is going on for everybody. Why am I only finding out about this live right now? Good question, because I rarely go live. So can you take a few minutes to explain what Henry Hub is for new folks? So Henry Hub, good question, Doug. Henry Hub is the marker margin for what we use in the United States for, let me pull it up actually. That's not what I wanted. That was a good map, though. Shit. Okay. You probably can't see all too well. But there's a lot of pipelines that kind of center around, if I were to play this video, there's a lot of pipelines that all kind of play in and come through Henry Hub. So there's pipelines offshore that feed in. So New Orleans is around here. If you go offshore New Orleans, you can kind of understand specifically, all the different onshore, the shelf kind of comes through here. You have pipelines that kind of come through from West Texas. You have the Haynesville, which kind of comes from northern Louisiana. So this is a central location for a lot of things that are going on in terms of gas production. And so what we call this is Henry Hub is basically the onshore marker for where pretty much everything is kind of being distributed from. And then what ends up happening is you buy this from Henry Hub, you have Sabine Pass over here, you have the Brownsville Ship Channel, which is over here to the southwest. You can't see it on here, but it's in the very southern tip of on the eastern shore of Texas, of the Gulf Coast. You have other LNG facilities in here. And so all of them buy from Henry Hub, and then they liquefy it, and then from there, basically, they put it on boats, and that's where they charge it. So they buy from Henry Hub at, say, $3 an MCF. You can see on the bottom of the screen here. It shows up in just a second. Henry Hub gas at $2.92. They're buying it right now, $2.92. They liquefy it for a fee of, let's just say, $2.50 for say, some of these places. Some places are only charging $2. Some are charging $2.75. And so you get it on a boat for, let's just say, $6 after all fees and stuff are said and done. Then if you look at what gases are trading for in, say, Dutch facilities, which is TTF, the title transfer facility up in Dutch country. In Europe, that's probably trading anywhere between $11 and $13. And then same thing with JKM, the Japanese marker, that's trading at anything, probably around $12, $13. And so that's what you're looking for. You're looking for that margin of $6 to sending it to Europe at, say, $11 to $12, $13, hopefully, and you're able to capture that margin of, say, $7. But of course, you're going to have to pay the transport fees associated with that. Do you own the boat? Or are you going to pay somebody else to ship it? Everyone's going to try to be making, a piece of that pie, because obviously there's a lot of margin to be made in that, right? Buying and getting it on a boat for $6 and then shipping it somewhere and pocketing it for, say, 12, 13. There's a lot of money to be made there. So in that respect, you kind of have to figure out what can you do to do it. Are you going to manage it yourself? You're going to pay somebody else to do it, etc. So that's kind of the thought process behind that. And just so people are kind of aware, you have this Henry Hub, which is kind of the initial place, but once you get it onto with liquefaction fees and everything like that, you have what they call the GCM, Gulf Coast Marker, and that's pretty much where people are trying to understand. So that's where you're trying to say, okay, if you're looking at Japan and it's $12, and you're looking at the GCM, which is $7, you're going to be making $5. 12 minus 7 is 5. So that's kind of what you're thinking about with respect to that. Have you heard about solidified natural gas? Not yet. Not yet. Yeah, very cold. Exactly. Is there too much? No. Aqua isn't going to deliver a single electron to any of these data centers for years. Maybe. 10-year dropping. Let's get those refinances rolling. Let's hope, man. Let's hope. That's the hope, man. I would love that. Yeah, let's check it out while I have you guys on here. 10-year treasury yield. Share this tab. So drop. And then let's just see, 30-year mortgage rates. Let's see, who do I like to use? Meh. That's not the one I like. Here we go. It's getting there, but it's not. It's getting there, but it's not perfect. So down to 6.2 on average. Saw a huge drop in mid-September. Then it kind of came roaring back up. See, I don't know. I don't know what to think. Yeah, I don't know what to think. All right, let's see what other questions we got here. Appreciate the 92 of you guys hanging out. Yeah, but I think it's pretty limited. I mean, you might have a second phase associated with the Canadian LNG on the West Coast, but not so sure. Not so sure how much more extensive it can get. That's a shame, man. It's a shame. I think that, I hope you do well on them. But I think that the problem with calls to an extent is when you have something like this and you want it to be a long, now it's different if you say buy it here and then you ride it till, say, goes back up to $9 or so, which I think is going to happen at some point here. And then you use that capital to buy shares or something like that. Very different story. But I think there's so many people that are obsessed with options. They're like, oh, well, if I do it right, I can 10x, and then I can find the next 10x, and next thing you know, I'm 1000x, and I'm retired. And it's like, but at the same time, there's so many people that unfortunately haven't gotten hit by any sort of recession yet, where these options end up just going to zero. And sometimes it's better just to own the goddamn stock. And you don't know what's going to happen, like, for a lot of these things. What I do know is eventually this company will be worth north of $20 billion. What I don't know is at what point is it going to be re-rated? Are people going to catch on by the end of 2026, early 2027? Are people going to get to catch on when the distributable cash flow starts coming through the door in 2028, 2029, before train 4 and 5 start up? Is it going to take until train 4 and 5 start up? Where next thing you know, people are like, oh shit, like these guys are getting investment grade. Like they're going to refinance all this debt and they're going to reduce their interest payments by X. And next thing you know, but notice all those dates are very close to beyond January 2027. And so I think a lot of times people think too short term. Options are great to an extent, and they can help with swing trades. And especially if there's like a large dip, like we've just seen in NextDecade. But the problem that I have is for example, prime example, I did buy, when the regulatory thing last year happened, I bought, I think it was January 2027 contracts for, I don't remember what it was, $7 or something like that. And they're underwater. But majority of my money that I spent right now is just going to shares. And the best thing about that is you could be a couple months off on timing and have vastly different results. But if you just own the shares, it's almost like, so anyway, do what works for you. But I just caution people that I think sometimes they get overexcited about options and they think that they know more than they do. And they get too excited about what they can potentially leverage, when in reality, they should be thinking about risk minimization. And unfortunately, when you only have until January 2027, you're worried about timing as well as the price. And so you can't, you're kind of putting yourself up against the wall. I get this question all the time, Next or VG. I think that's up to the eye of interpreter, right? I mean, Next, as you've seen, doesn't produce anything. It's got hair on it. Will there be delays? They still say second half of 2027. So literally within the next 2 years, we should start shipping from train 1. And you're still going to start, just getting distributable cash flow to help pay down some of that interest and amortization for trains 4 and 5. And I think that that's phenomenal. But VG, I think is a great play as well, especially with the retracement that it's had, and it's actually producing. So I think VG will eventually be $100 billion company. So it could on its own also get to a place where, I'm trying to think, is it down to 25 billion? Let me see. Yeah, 22 billion. So it on its own could 4.5x, and then if there's share buybacks, it could do well as well. So it really just depends on somebody's willingness to take on risk on a company that doesn't currently make revenue versus a company that does. And is that extra potential of, say, north of a 5x enticing enough to gamble on a NextDecade, which I don't think it's a gamble, but other people might because it's pre-revenue. I have high conviction, but it could very well go sideways. There's a chance that it never starts up. Something drastically bad happens. A flood, a hurricane comes and wipes it away. You don't know. Some force majeure sort of thing kind of happens. The next thing you know, you're screwed. But to me, I think both. If you look at the grand scheme of things, VG to me is more of a bank. It's more certain, yes. So I think that there's, and especially now at these prices, it it might lean more closer to an obvious choice to be VG, especially if you're very risk averse. But I still am cautiously optimistic that Next is a better long-term return, and we will be surprised by the eventual share price. I think, unfortunately, a lot of people are not giving it a lot of credit. But you also have to think like that return that you might get, 4 or 5x is over potentially 10 to 15 years. You might say, oh, that sounds great. But if you actually annualize it, it's not as great as you might think. And so there could be other things in the short term that you might want to look at. To me, I'm very optimistic in these things, and it's almost like investing in a bank for me to an extent. Anyway, I don't know if this is as, I don't want to say deep as it gets, but I mean, this is pretty deep. If you probably might have to listen to it a few times, but really, that's pretty much it. I mean, you're pretty much taking the gas from your upstream producers, you're transporting them through pipelines, and so you're not investing in any of that with this, right? And then with NextDecade specifically, the investment is then taking that from the pipelines, liquefying it to 1/600th of its original size, and sending it worldwide, right? So just like how in oil, you put it in oil tankers, you're trying to do the same with LNG, and you're moving it to places that have the demand. And so that's pretty much it. And that's pretty much all you're trying to really do with this. So yeah. About $1 billion a share. $20 billion a share. No, I mean, it really doesn't matter, right? Like, what is a price target? Do you want a price target for next month? Do you want a price target for next year? I don't care, what people want it to be tomorrow or next month or the end of, people always ask me, I'm like, I'm investing this because I think with high certainty, I could say that this is going to be a 5 to 10x return in the next 10 years. And then people are like, but what's your price target for next month? And I'm like, well, who the fuck cares, right? Like, I can't tell you that. I don't know what's going to happen and transpire between now and then. But what I am consciously optimistic about is that they're going to be able to deliver this project level company. So I always hate when people ask me about a price target. It's like, hey, like I did the same thing with Palantir. I'm like, hey, I'm investing in Palantir. I think it's going to be, a $300 billion company in 10 years time. Well, it took half the time and ended up being a $400 billion company. But, people are like, well, what do you think it's going to be tomorrow? And I'm like, I'm not buying it for tomorrow. So, if you're buying it for tomorrow, I can't tell you. It's not the way I invest. I'm not investing for tomorrow. I'm investing for 10 years time. So, hopefully, and people always like give me crap because like, Matt, just answer the question. Like, I don't understand why you're so rude to the chat. And it's like, but sometimes you have to answer the question that's not being asked because sometimes people, like, generally speaking, don't understand the topic enough to ask the right question. And so sometimes you have to come up with your own answer to the question that they might not even be asking because they might not understand fully or comprehend fully the topic at hand. And so that might seem like a dickish answer, but it's the truth, right? Like, how am I supposed to question Albert Einstein about physics and get the best possible answer when I don't know goddamn anything about what Albert Einstein was working on with physics, right? So it's kind of something comparable, and I'm not trying to compare myself to Einstein by any means. He's probably way smarter. I'm probably the stupidest person in this room of 100 people. But yeah, I mean, I think people just need to recognize is like sometimes you ask the wrong questions, and to me, a price target is I think it's going to be a $20 billion company. It's hard. And it was even harder for Next in the past because I didn't know how much dilution there was going to be. And I still don't know if there's going to be dilution. There still very well could be. And there's always going to be some sort of dilution, right? It's just, I was anticipating trains 4 and 5 to be dilutive events, and they are not. And so now I'm curious, Is train 6 going to be dilutive? Is train 7 going to be dilutive? Is there going to be, just the only dilutive events? Is it just going to be share-based compensation? And that's going to be, a couple percentage points a year? Or is there actually going to be a 25, 30% dilutive event on me? I don't know. I do not know. Next IPO in 2017. Oh, did it IPO in 2017? Sounds right. Let me see. It was before 2020. No, I guess it was 2020. Oh, sorry. Yeah, 2017. I was on 5 years. 2015, 2017. Let me pull it up. I mean, it just goes to show you. I mean, these projects take forever. You can see my baby buy. I'm down. Yeah, you can see my baby buy on it. How many shares is this actually? Huh. 2,000 shares. It's a small amount of the total share count that I have on Next, but I didn't realize I had this big of a position in Next in my Robinhood. I guess it goes to show you that every once in a while you just throw 1,000 here, 1,000 there. It adds up. What's going on, Mr. Ketchup? Clayton Bigsby, what's strike price? I have $7. I look pale. Oh shit, maybe I'm dying. I'm so pale. Where did I get that hat? Thankfully, a fan named Curtis made it for me, and he sent it to me. I don't know if he wanted me to say that or not, but he sent it to a few people, at least, I think. I think that they put a pause to the lower carbon right now, and I think they're just trying to focus specifically on getting the LNG online. Matt Money got paid for all those gold stars. I'm confused. Do you do gold stars or something on Twitch or something? I don't know. NextDecade will be $0 at launch tomorrow. Hey, it's not for me to determine what's right for your portfolio specifically. If you're looking to see some sort of bump or something between now and the end of the month or something like that, then by all means do options. This is, for me, if you think about it, and I think about this a lot for a lot of companies. Like I had somebody come up to me in Miami, and they're like, Matt, I just don't understand why you don't just buy leaps for everything and or do spreads for everything and 10x your money and then sell it out. And then once you 10x your money, just find the next thing that's going to 10x your money. And then I was like, to me, I'm like, that just assumes you're going to be able to find something to 10x your money every time. To me, like, I always look at it like, when was the right time to sell Amazon? When was the right time to sell Microsoft? When's going to be the right time to sell Palantir? When's going to be the right time to sell Rocket Lab? And the answer is beyond 2027 for me, most likely, or if not ever. So why would I limit myself to owning Amazon until 2027 or 2028 when I can hold it forever potentially by owning the shares? And so Oh, did you buy some? Thank you. I appreciate you. And so to me, it's just like, I get it. Like, and it's not to say I don't buy leaps. I do buy leaps, but it's just like I have so few leaps comparatively to my share count, because I eventually know that NextDecade will pay dividends and buy back stock. Just like I know Rocket Lab will eventually pay dividends and buy back stock. Just like how I know eventually Palantir is buying back stock and will pay a dividend one day. So I want to be a part of that. I bought Palantir. My cost base is at like $13 or $16 for a lot of those shares, and some of them are at like $6, $7. I wouldn't be surprised if eventually it's paying out like, I don't know, $5, $6 a year in dividends. And so like you're getting a return on your investment of some of those shares of 80%. You can't do that if you buy leaps. So, I mean, I'm not saying you're wrong. It's just how I invest. And so, like I said, like just because I invest a certain way doesn't mean you have to. But I like to present an alternative, because sometimes, like I said, some people aren't thinking about things in a certain way, and sometimes that different perspective might get you to think like, oh shit, like I was really expecting to get dividends and buybacks is eventually from NextDecade, but buying these options, I'm not entitled to that, am I? And case in point there, right? So it's not to say, same thing with Rocket Lab. Like I was literally this is like wild. I was like talking to my buddy, and he has 800 shares of Rocket Lab, which I'm ecstatic for him, because like 800 shares, man, like that's a good chunk of change. I'm happy I got him 800 shares. Like for a while, I thought he was really dragging down. So, price target in 30 minutes for NextDecade. It's probably $6.35. Yeah, $6.35. That one I can be certain of. The like I was just thinking, like I was buying shares below $4 for Rocket Lab, and earlier today, the $100 contracts for the end of November covered calls were selling for $2.60. A month and a couple days out for $100. So you're talking something that needs like a 35, 40, 50% like uplift to be able to get to. And it's selling for like 60% of cost basis of some of the shares that I bought. Like, holy fuck. So you start to think about it. It's like, it's like, what are you going to do? Like January 2027, like, so you did well on your Rocket Lab. Like now you're forced to take capital gains. You're forced to take the capital gains. You don't even have a way around that. So now you have to sell it. You're forced to pay the tax man. I could hold my shares forever. I might not ever have to pay the tax man. I could just borrow against it. Like I've literally thought about, I mean, I have some of my Roth that I can't transfer, but I've thought about moving. This is literally what I can do with my shares, right? And you cannot do this with your options. I've thought about moving all my S&P 500, my Rocket Lab, and my Palantir over to a separate account, so that I can use that to basically be my own bank for my next real estate purchase. Now, I'm not going to buy a couple $1 million house, so it's not like I'm going to be that troubled, right? But what I would do is probably use 10 or 20% of it and be my own bank and find my potential retirement house that I eventually plan to move into. And in the meantime, I'm going to rent it out because I'm still living here in Houston. But and the house will probably be on the beach in Jersey somewhere, not on the beach, but around in a beach town. Maybe to be on the Bay Beach. I don't think I could afford the beach. Those are multi-million-dollar houses. Right now, I just don't have the money. But yeah, the hope is that I could do that and pay it down, over time. I can't do that with options. They wouldn't give me that flexibility, and not only that, but like I could borrow against it tax free. Not sell any of it, not be forced to sell it, not have to pay Uncle Tom, Uncle Sam. Uncle Tom's different. Uncle Sam. I don't know. Will you be interested in Anduril? Thank you again for the $50, man. That's super kind of you. I was not expecting it, and it always goes back into the portfolio. Like I live, like this is how much I spend in my this is the most expensive room in my house. Like this is the stuff I spend my money on. Is my portfolio and T-shirts for Alex Karp and Sir Peter Beck. Like that's pretty much it. These, like you can hear my laptop, it's dying. So I need to buy a new laptop. But that's what I spend my money on. Like my money is truly tied up all in the markets. In my house, the Airbnbs that I bought in partnership with others are nicer than the house that I live in. So I don't live in a shitty house by any means. It's a new build, 2022, 2023, but it's just a small. And the Pokemon cards that are behind this chair. I need to move this chair to the guest bedroom. Open up some room in here. But what does it say? But yeah, I think people just need to think about what are they doing it and what for, right? I think so many times people are lured by, oh my God, I bought this option and it went up 50x. And they focus specifically on options, right? And so let's just see. Been following you for years, older than you, not working currently, so I've only invested in mutual funds and ETFs. I invest in very few stocks. There's nothing wrong with that. Nothing wrong with that, especially if that's your chair. There's nothing wrong with nothing wrong with that. Do you ever sell shares that have had a run and put capital into the shares that haven't? Do you mean in the same company or different companies? Kind of confused by this question to an extent. I mean, like what I try to do is I try to keep a small amount of companies, different companies. Yeah, I mean, like I sold some VG the other day, not other day, but like within the last month and a half, and put it in Next. And it had run a little bit, but not like crazy amounts. But I was up on a lot of that. And it was just because I have higher conviction in Next right now than I do in VG. Not to say VG is bad. I think VG. I look at VG almost as a bank, right? When I sold it, right? I think I sold some at 18, 19, and used that to put more money into Next. And I think I did something similar with that was probably whenever VG was 18, 19 bucks, and maybe even some more in the 16s. And then more recently, when VG was in like the 13 or so range, I sold some and put it into Next after the Train 4 announcement when it dropped. But I mean, I haven't really sold any shares in Palantir. Haven't sold any shares at Rocket Lab at all. None in Bros. None in Amazon. None in Google. I don't know. Well, you're saying you're going to buy a house when Peter Beck brings it to 400 billion, or am I? What do you do to not let the market be all consuming, meaning not have a life outside of it? You guys have a life? I like my job. I'm pretty good at it. It allows me to kind of understand concepts like LNG, and so I do a lot of focus on LNG. We don't talk about LNG a lot at my company because we're mostly upstream focused, but we do have LNG, so I can't say that, um, but I don't sit in that part of the business, so mostly I focus on the upstream part. Um, but to be fair, I put a lot of effort into the markets. I love it. If I'm not working, I'm doing Cash Flow Chronicles with Chris Patel or this, that, or the other. Speaking of, um, is it 8? Let me message Mr. Patel because if we're doing a stream, I would rather do it now. Because I want to be done by 9:30 ish. But the best thing you can do, I appreciate the super chats; those are great. But like I said, not at all necessary. And while appreciated, please invest your money. The best thing that you can do for me is two things. And somebody said this to me the other day. They sent me like, "Thank you for Palantir, thank you for Rocket Lab," and I said, "Do me this gift, and I'll double up on the gift." The other gift the gift that I asked him for is, if you're on the beach and you're having a good time, and then it's partly because you feel like you could be free and partly financially free because of what I was able to help with by any means, just sharing my thoughts about Palantir, Rocket Lab, that caused you to do your own due diligence to then invest. And by no means am I the person doing the work, right? The guys at the companies, right, deserve all the credit. Palantir, Rocket Lab. But if I just even open your eyes up to it, the best thing you can do for me is just show me a picture of you on the beach having a good time. And the second thing that you can do for me is just share the stream with somebody else. So hopefully that they could be in the same position that you are. And that has always been the premise of the channel. The premise of the channel is always when I started this back in 2013, I had no idea what the hell I was doing. My family does a lot in real estate, and so when it came to stocks, everyone was just like, "Matt, you're an idiot." And so they're right. I am an idiot, but that's neither here nor there. The thing that I was always kind of curious about, though, is like, well, if other people can make money in the stock market, I can hopefully do that as well. And then I just always wanted to document what I was doing, and hopefully others help either my family members if I unfortunately got hit by a bus, which so far, believe it or not, have made it through. And then second, people just started watching the videos that I was posting, even though it was for my family and documenting my progress. And people started watching it, back in 2017, 2016 timeframe, and now we're almost 9 years on, creating videos on the internet. Laundry list of stuff, going all the way back to focusing on dividends to now being here with Rocket Lab and Palantir and something like that. So yeah, no, Next is not upstream. Upstream is more like your super major oil companies, ones that are drilling for oil and gas and stuff like that. So yeah, hopefully you guys can just share the stream with somebody else. I'm going to try to get on with Mr. Patel. And hopefully I can figure that piece out. But as always, you guys rock. And Ray, please let me know where we're meeting up for din or lunch on Sunday. I can't wait to hang out with you. And hopefully, Doug, if you're still here, if Ray hasn't mentioned it to you, you're invited. And bring the boss lady. And if anybody else here is in Houston, want to meet up for lunch or dinner, it's on me if Ray and Michelle are okay with bringing others. But yeah, appreciate everybody. And if you guys are just tuning in, 125 of you, wow, I'm super appreciative. As always, and the two of you on Twitch, thank you, the Twitch gang, for keeping me honest over there. Every couple days, I'll get another follower over there. So hopefully we'll get to 1,000 over there on Twitch and eventually grow an audience to, a couple dozen people. And that's all I can hope for, right? Is reach another audience completely new on Twitch, completely separate from the YouTube community, because fortunate for us, the Amits, the Steves, the Chris's, we've been able to really hone in on a great set of audience and recycle that between us three. But my hope is that we can really branch out, and, I'm streaming this. I thought I was streaming it to Kick. I guess I'm not. I'm streaming it to X instead. But I want to get it on Twitch. I want to get it on Kick. I wanted to get it everywhere. I want to get another group of people. Like, think about how much people, 17,000 of you following me on YouTube now, 20-odd thousand following me on X. Like, if I'm able to, meet you guys and help you in any sort of way, shape, or form, and then, find some people on Twitch as well. Wow, from Brazil, man. Twitch from Brazil. That's what I'm saying, guys. Like, that's awesome. So yeah, like if I'm able to help in any sort of way, shape, or form, find other people on a completely different platform, then I want to do it. And because I've gotten so many DMs from people on YouTube and people in Miami when they met up with me, and like a lot of people are getting a lot of value from Amit. A lot of people are getting a lot of value from what we're doing on X. So please feel free, if you know somebody that's more into Twitch and they're on YouTube, share them the Twitch link. Just anything that we can do to really help people up that learning curve. But yes, please, if you are in town, reach out to me. If you're not a creep or don't seem like a creep, I'm more than happy to meet up with a lot of people. It was a date. That's fine. Michelle, you can't come. You can't sit with us? Sorry, just kidding. I appreciate you. I don't deserve fave analyst, but wish I spoke more on Cashflow Chronicles. I don't want to. It's very interesting. I like every time I interject or interrupt Chris, people are like, Matt's a dick, and I'm like, what the fuck? Like, he just spoke for 15 minutes. Like, I can't say anything. Like, it should just be the Chris Patel show at this point. Like, so it's kind of funny in that respect. It's just like I'll just sit there, wait for Chris to finish his point, and like I'll like sometimes interject with something like, can we move on to the next point or something like that? Because we've been talking about it for quite some time. And then everyone's just like, man, Matt's really an asshole. And I'm just like, dude, like, I can't win. Like, here I am. I try to keep the stream somewhat short and concise because the last thing I want is it to go for 4 hours. And as much as it is great to sit for 4 hours, unfortunately, regardless of whether or not, and I've been doing this for some time, regardless, generally speaking, of you do it for an hour or 2 or 3, there sometimes might be a slight increase of viewership time total, but it's not proportional. So generally speaking, if we do an hour, we get, generally speaking, 20 minutes to 30 minutes out of people on average that listen, which is phenomenal, right? So appreciate you guys listening to 30 to 50% of the show. Like, that is, on average, that's great, because half the people click off. So that means, half you guys are watching all of it. So that's appreciative. But that does not correlate. So if I go to 2 hours, that doesn't mean people are generally watching an hour of that stream. It generally means maybe we go 25 to 35 minutes instead of the 20 to 30 minutes. So at some point, unfortunately, people have diminishing returns and they click off and do something else. And then a lot of times it's because generally what people do, if they're driving somewhere or running errands, it'll take them an hour. But things that take 2 hours, a little bit more difficult to kind of fill that time span. So a little bit of science behind that for you guys. But so my hope is I want to keep people somewhat concise in that respect, and in that respect, and I want to respect people's time too. Like, you can only get so much like I know people want to continue to hear about their own particular stocks, like BM&R and this and that, but it's like you can only have diminishing returns about talking about the same topic for so long, unless some new news is out. Like it doesn't make sense for me to bring up, the same topic and just talk about it in a different perspective or different way, 18 different ways from Sunday, unless something different has changed. So, yeah, well, I love Chris too. That's why I continue to do the show with him. But sometimes, and he goes on phenomenal rants, and those rants are very important. But sometimes you need to rally him up a little bit, and yeah. So, but I did not hang them yet. So they're just in little frames at the moment, and they have little things in the back, and unfortunately, like I said, the depth of them is like only this thick. So I'm a big dude, so the shirt is a lot of fabric. So trying to fold them, it doesn't necessarily fit. So next time, if I were to, in retrospect, do this again, I'd probably order a slightly bigger thing. I think these are 13 by 13. So I'd probably order something. If they had a 16 by 16, it'd probably be absolutely perfect. Or even a 13 by 16, 16 in height, 13 in width. But also I'd probably, if I knew I was going to hang them, maybe I would order 2 shirts, right? One to hang and then one to actually wear. Because now I'm like, well, shit, like I actually kind of want to wear the carp shirt. Like that'd be kind of cool. It's like the Heisenberg shirt almost, right? Like be kind of dope. But yeah, the hope is they have little things on the back, and I have one for, let me show you. This was kind of cool for Neutron. So this is the shirt that I got from going to LC3. This one shows up really cool. Like this is almost like perfect. And so I think the same thing, like if you look at the same emblems on like the Scouts arrow right there and then Haste, like I think that the 13 by 13s are perfect for that. But unfortunately for not built to build shit from Sir Peter Beck is a little bit too long. And then same thing with Carp. It has a Dominate underneath. Like, so it has Carp and then it has Dominate. Unfortunately, you can't see the Dominate piece underneath. So, but anyway, Steve is live now. So if I assume a lot of you guys love Steve, please, he's my buddy. He's the myth. He's the legend. Maybe I'll hop over there really quick. Maybe he actually can. Like, it's just him right now. So I encourage you guys all to go over and watch Steve. Let's all just do a quick look, see what Steve's talking about really quick. Hot Steve, what are you talking about? Dreamforce, Salesforce.
Good for everybody.
Salesforce, so, Steve.
The whole thing. I just want to go through the
Salesforce
parts to me at least.
God damn it, Steve!
Before, and
can't believe Steve's talking about effing Salesforce. All right, you guys rock. Appreciate some of you guys got to go mod. Please go over to his stream, and hopefully I'll see you guys over there. Maybe I'll be fortunate to get a stream up with Mr. Patel. But yeah, Salesforce, come on, Steve. I thought we were team Palantir over here, and you're over here talking about Salesforce, Uncle Mark. Effing Steve. You guys rock. Thank you guys so much for hanging out with me, the 100 Every Show guys coming up on here. And as always, please let me know. One's in the chat if you didn't see a single stream or ad all stream once the stream got started. So no midstream ads, please. If one's in the chat, if between when you got on the stream until now you haven't seen a single advertisement except when you clicked on the stream, just one on the chat for me. So I know that I'm doing my job. If you did see a midstream ad, please let me know. My goal is to get back to you guys. I've just gotten so much good feedback from you guys about you're on premium though. Yeah, there you go. So that's my hope is, you guys give so much to me. So I want to get back to you guys, give no midstream ads. Of course, if you're watching this as a replay, there's going to be ads. YouTube's going to put ads all over it. But as I can control streams, the ads during the stream itself. Hopefully you guys saw nothing. So I see lots of ones in the chat. Thank you guys so much. Appreciate you guys. Hopefully I'll do this a little bit more often. I used to do them at least once or twice a week, and Steve is inspiring me. So please, as always, continue to go over. I'm posting Steve's YouTube. He's live now, so please go over and see Steve right now. I'll just hang out for a second or two while that pens, and so hopefully everyone can click over to there, and hopefully I'll see you guys in the chat section over there. And if not, I will see you guys in Cashflow Chronicles. Talk to you guys soon. Cheers. Yeah.